You are listening to Mining Stock Education.
I took the company from 38 million to about 400 plus during my tenure. So those that remember me from those days still are very happy with me.
In today's show, you're going to hear from an expert with over 35 years of investing and running junior mining companies all throughout the world. He's had several successful exits, identified companies in near terminal positions, and was able to turn those around. He's also going to talk about what many investors in the junior resource sector miss. Welcome on to the show, Ed Baer. You're based out of Toronto. You currently invest through a private entity in the junior resource sector, although you have experience running public companies in the junior mining sector. Could you give my audience a little bit of an introduction to who you are and your career, please, to start off the conversation?
Yeah, thank you, Bill. Thank you for this opportunity. I'm happy to provide my insights. I'll give you a little caveat. Obviously, my thoughts are based on my experiences, and not everybody has the same experiences, but I hope that your audience can garner some ideas as to the things that maybe they should be mindful of, and some ideas that people take for granted that maybe they shouldn't take for granted. As to my background, I came out of university with honors bachelor in political science, which you can hang it on the wall. It still doesn't do very much for you. But I proceeded my career by entering into the natural resources space. However, my entry was into forest products. I ended up working for a company called Green Forest Lumber that was a lumber wholesaler. But then we decided to buy a facility in Chapleau, Ontario, right at the north of Ontario, to actually cut our own lumber, be able to have some lumber rights, which there's significant value to, even to this day. And over a period of about 2.5 years, we were able to take the share price. When I started, it was $2.30. In 2.5 years, we were able to put together a really good transaction. We sold the company to Macmillan Bloedel, which was then taken over by US-based Weyerhaeuser for $119 million in total. So it was quite a good ride, and it was a lucky entry for me into the marketplace. As the transaction was unfolding with Green Forest Lumber, I was approached by TVX Gold to see if I would be interested in working for TVX Gold, learning about the mining industry, and working with a gentleman by the name of Ike Batista, which I'm sure we can talk about a little later. He was known until 2012 as the seventh wealthiest man in the world. And then I proceeded to go on my own and really kind of decided to take some challenges on. I went to Colombia in 2001 to 2003, turned around a company called Greystar Resources. And then I was asked by shareholders of Greystar Resources to see if I could do the same and continue my lucky streak, I guess, if you want to call it that, at European Goldfields based out of London in the UK. And I was able to make a significant transaction that boasted the company's significant market cap. And ultimately, that company was taken over years later by Eldorado, where the assets of European currently reside, for about $2.5 billion. And I took the company from 38 million to about 400 plus during my tenure. So those that remember me from those days still are very happy with me, and even with my previous standing at TVX and with Greystar. And I've had pretty good successes outside of mining too. I turned around a company called Dynacare Labs, privatized that. People more than doubled their time in 18 months that I was there. So in total, I've had 8 significant transactions. I can't tell you that it was all me, obviously. One person does not a company make, but I was able to make some very good decisions. I was able to benefit from very, very good people around me and some very good support. And along the way, I did fall flat on my face. I did have to take some significant hits. I had to stand up when TVX was facing bankruptcy and really take it on the chin when I was left alone to deal with some issues that others didn't want to. So you learn, but I'm grateful for my career. I appreciate the challenges, both, the significant uprise and the significant downfalls too, and, falling flat on my face. But I never lost perspective of where I wanted to be. And I think that's really what made my career a success, that I wanted to ultimately learn. I wanted to always educate myself, and that's one of the things that I appreciate about what you do at Mining Stock Education. You're educating people and warning them and cautioning them and telling them that, mining is fluid. You got to be careful. You got to understand what's going on around you. And it's not all about gold being at $3,300 an ounce. It's about some of the things that transpire.
What do you think retail investors get wrong the most in this sector from your observations?
They read the press releases and take them for granted. They take the word of the companies at face value without really understanding what it is that they're getting involved with. I think they don't understand sometimes that the jurisdictions really matter. I know a lot of people are talking about that in the last couple of years. And the biggest challenge that I see and that I get asked about all the time is, how come gold is at $3,300, but my share price is 17 cents? Because, the answer is one doesn't correlate with the other. That's the truth. You're talking about a junior mining exploration company that has X value based on ounces on the ground versus a producing company that actually may produce gold or a refined piece of gold, i.e. an ounce of gold, $9.99 pure, that, has a value of $3,300 that's commercially traded daily. But, a junior mining company cannot base itself on the current commodity prices. And I think that's where people get caught. The challenge for a junior mining company is obviously the exploration side of it, that the geology is ultimately going to yield the desired returns. But most important, knowing how to increase the value on the ground. And the value on the ground is significantly less. Well, I'll give you an example. We're in the middle of a transaction right now, private transaction, where we're offered an asset in Ecuador. And we can talk about Ecuador in a little bit, but the ounces on the ground are, the seller claims he's got 4 million ounces on the ground. We claim it's about 2.1, but not 4 million. Irrespective, the most that we consider paying is $10 an ounce on the ground, not $3,300 an ounce. Right. And I think that's where people kind of get this serious disconnect. They expect that whenever the price of a commodity increases, that the share price should increase in tandem, and it doesn't work that way. And I think a lot of people are, they think it's a cheaper way to entry, but it isn't. It's actually a more challenging way to entry.
So with this perspective, how do you play the cycles? So, isn't the idea to buy low, sell high with the cycles of the commodity prices?
No. I've never subscribed to that. Actually, what I subscribe to is, as I said, jurisdiction for me is a priority. We only play jurisdictions where I've had previous success. Reason being, I like to know the language that's being spoken in the area that I'm going to. I like to know the people that I'm dealing with, preferably the rules of the game in that particular country. And every country's got their own nuances. In Canada, for example, every province has its own nuances. People tell me, what's your favorite province to work in Canada? You know what mine is? Manitoba. I wouldn't go to Quebec. I wouldn't, Ontario's got its own issues, but Manitoba I love. And the reason being is they're more accommodating. BC, for me, for example, is always going to be challenging just because of the politics behind it. I know there's significant resources. There's new mines being built. I'm aware of all that. But I also like to sleep nights. I like to make an investment where I'll be comfortable waking up the next morning knowing that my money is where I want it to be, not having to worry about unnecessary issues. There's enough issues as it goes on to build up an asset. And I faced that. I faced that in Greece for many, many years. It was a nightmare and continues to be. El Dorado, as I alluded to earlier, currently has the assets that were European Goldfields, and the main assets were previously TVX Gold. So picture this, over 6 years, between 94 and 2000, TVX spent over $300 million US in Greece. Didn't get anywhere. Then, European Goldfields, I buy the assets from the Greek government back, put them into European Goldfields. European Goldfields has it for about 8 years. Then it gets taken over by El Dorado in 2011. We're in 2025. The Skouries asset, which is the main asset they were after, is currently under development. Still hasn't produced anything. So over a 30-odd year span, not 1 ounce out of Skouries. That keeps you up. That keeps you up at night. You got to keep on funding these things. You got to keep on growing these things. And the more money you put into it, the more you invest it. So you don't want to just get up and move away. You want to see it come to fruition. Not an easy thing to do.
You're aware of the sunk cost fallacy, where someone says just because you've sunk cost into it doesn't mean you need to keep putting money into it. How do you reconcile that with, hey, I'd like to buy a cheap asset that has a lot of money into it that I can then monetize? How do you view those things? So
sunk cost is a real difficult thing to judge. And you get 10 people in a room, you're going to get over 100 opinions. Everybody will give you more than one opinion because everybody looks at it differently. What I have encountered, and I can speak to, reports that I've actually hired people for and funded and do due diligence on, you got to look at what it is that you yourself are after first. So if you're actually building on geology, then you got to be appreciative of the fact that there may be over 100 drill holes, let's say, on a particular deposit. Can you continue that, and will it lead you to either increases by size or length of the actual deposit? So if you're at a 1 kilometer, can you go to 1.5, 1.7? If you're looking at depth, does it really go below the 300 meters that the previous parties were involved in? Like, you got to determine where it is that you want to go. But I can tell you, if you're going to base your investment solely on sunk costs, there's got to be a reason why they left and why people stopped funding it. So you got to understand that first before you're going to make the decision to take it on and put your own money into it. And, it's easy to talk about it, but it's very difficult to be able to put it into fruition. And the other thing that's interesting too is you got to remember what's going on around you all the time, Bill. And I think that's one thing that people don't recognize. Can we talk about South America? Ecuador, for example. I'm a shareholder of Lumina Gold. I love the asset. I love the Cangrejo assets. I've known it for a while. I've known Ecuador for a long time. If you remember, I was born and raised in Peru, so I speak the language. I know Ecuador. I know Peru very well, obviously, and I've worked there. So one of the things that really intrigues me is, why did Ross Beaty, largest shareholder of Lumina Gold, very, very savvy investor, somebody that I hold in extreme high regard, sell this magnificent asset for $581 million Canadian, when to my mind, it's worth significantly more. And COMC, the Chinese entity that's buying Lumina Gold, they're going to benefit from a sunk cost, to your point of sunk cost. And they know what they're getting themselves into. But I keep on wondering, why is Ross Beaty giving this up, but, let's say a third of where I would have considered a buyout price to be fair? So sunk cost aside, yes, shareholders doubled their money, if you will, but that's a significant asset to have. It's one of the world's greatest assets, certainly one of the best assets in South America right now.
Can you answer your own question you just asked?
I can. Political challenges of South America never disappear. They go in cycles. I don't, again, as a Peruvian, I can tell you, I've seen cycles in Peru go up and down. I've seen the shining path come and go, but they've never disappeared. They're still there. The shining path is still in Peru. Atrocities are being committed on a regular basis. And to tie it into Ecuador, sadly, a lot of that has transitioned into Ecuador right now because of the lure of money, the lure of this new attraction to invest a lot of money into Ecuador. Not only attracts the cocaine traders who survive from, the cocaine trade in countries like Peru, Bolivia, Colombia, and Ecuador, but more so because they see all this money pouring in, these mines being built, this money being made, and they make their presence felt. If you remember when you and I talked previously, I was in Colombia in 2001 to 2003 with Greystar Resources, and nobody wanted to go to Colombia because the guerrillas were running amok throughout the whole country. 3 guerrilla groups. We had to deal with the ELN, the second largest group. We even had to kind of deal with the military to be able to have a 25 square kilometer protection zone that we agreed to do things for on behalf of the military, for them to patrol and keep our people safe. To give you an idea, we ended up getting prosthetics for people in Colombia because we needed to figure out a way to be supportive to the community. And they didn't know much about prosthetics at that time. Canada was very much advanced in it. We had ideas to bring in prosthetics into the country and help people who had lost limbs. We bought them a significant amount of sleeping bags, for example, tents that are adept to working in very cold weather, because again, in Canada, you experience those situations. So you take the equipment that works here, in stressful situations, and you see if it can actually benefit the people down there. And the military liked it. They agreed to it. And before you know it, we had, like a cordoned off area of 25 square kilometers in or around the Angostura project.
I want to go back to Manitoba. In 9 years of doing interviews, nobody's ever said Manitoba to me. I don't even like top 10, top 3. I don't ever remember hearing Manitoba. Can you, so that's like a contrarian take. I don't know where the Fraser Institute puts it. No offense. I've been told the Fraser Institute, you can buy off your positional rank in that jurisdictional ranking. Whether that's true, we'll see. But why Manitoba?
Why Manitoba? Because exactly what you're referring to. People, the majority, again, the masses go to Ontario and Quebec because of the incentives therein. They go to BC because of the attractions of the large deposits that still remain, or that people still talk about and they're still trying to develop. I mean, there's some deposits that have been going on and on and on in BC that haven't seen the light of day yet, but they continue to be built on because of this idea that sooner or later it's going to materialize. However, when I was at TVX Gold, we had a mine in Snow Lake, Manitoba. And it's still functioning 30 years later, never an issue, never political challenges, people very, very pleased to be employed. And they make your life easy. They're welcoming. They're trying to bring in more investments by doing the right thing. They're trying to work with you, not against you. Communities are supportive. They understand the need for employment. And they're respectful of the fact that it takes two to tango in this case. The money comes from the mining company and they're going to develop the asset, but the company can't do it without the help of the communities.
Where do you get your deal flow from, Ed?
So during the pandemic, I kind of came out of my self-imposed retirement and I decided to get in touch with my long-term friend in Lima, Peru, a long in the tooth geologist with over 45 years of experience with significant discoveries right throughout Latin America. A brilliant man. Worked for his last job was with MinSur, the quasi-Peruvian mining company. And Luis Montoya is his name. Luis agreed to come and look at some stuff with me. Before you know it, we got really into it and we reviewed over 60 companies. And when I mean reviewed, I mean we did extensive due diligence, all in jurisdictions that I would be very comfortable in, where we've succeeded before, and where we realized there was a potential to continue to grow as a mining entity, both from an investment point of view and also from an intriguing point of view. And that's part of what I like. I like the challenge of finding something. And I base a lot of my work through history. I read a lot of books. I like the fact that history tells you where a lot of smarter people than me have ever been before, going back hundreds of years ago, even days of the Bible, if you want to go that far, where people were actually looking at the riches. We haven't invented anything new but the pursuit of gold. That's from day one, pretty much. But I base it through history. I base it through significant due diligence. And
Let me give you a little pushback on Nevada. We wouldn't have the gold mines in Nevada, right? Unless there was advancements. I mean, so exactly. If someone's listening and saying, what about Nevada or other advancements? I mean, can you elaborate on what you mean when you say that? Yeah,
sure. So, okay, so let's talk about Nevada for a second. So Nevada's kind of in a place of its own since Barry did what he did at the Carling Trend, right? But initially, they didn't realize what they had, right? I mean, it was once they figured out what the metallurgy was going to be that ultimately realized the barrack that it became, But Peter Monk took a really significant challenge on and was able to get support from certain people in Toronto that continued to believe in what he was trying to do and get the funding for it. But it took a while for them to get to where they got to. And part of it was that they didn't know how to deal with it. The technology that they were trying to bring was new in sense of using, for example, refractory solutions. Refractory ore is very complex. You and I talked about the fact you've seen what it takes to recover ore from refractory ore. You got to build a significant vessel to be able to cook the ore that you're actually going to be dealing with. A lot of things can go wrong. This thing is massive. Imagine if it blows up. The repercussions would be huge. So you're taking that on too. Imagine being a CEO of a company that has to deal with refractory ore and knowing that ultimately to appease your shareholders, you have to produce it using that particular technology. It's a tough decision to make. You can't take it for granted now that it's up and running. Yeah, but think about it at the time. You're taking on technology that's new. You're bringing it in and you're working in a place where drilling is very, very expensive. And number two, drilling is not necessarily conducive to diamond drilling where people usually try to support the most. RC drilling for a lot of people is not palatable. A lot of portfolio managers, if you've talked to them on a regular basis, RC drilling, they usually wince at, it's like, taboo, break out the garlic, as a vampire, but they don't appreciate the fact that you have to take sometimes what is there, and you have to give in to the land and to the geology as it is to be able to ultimately get over that hurdle. Once you do, it's great, but everybody forgets what it took to get there. And I guess that's one of the things that I really wonder a lot about. There's a couple of projects in Peru, if I can tell you, that I'm really intrigued about. But I know, unless somebody can tell me different, and I've been at this now for over 4 years on one company in particular that I've analyzed top to bottom, I can tell you everything. I don't need to look at it again. But I don't think they'll be able to turn over the community at any point in time, not in our generation. So all the money's to the sunk cost coin that we talked about before, all that money's gone. The monies that have been raised, the multi-million dollars that have been sunk in the ground, and that's just at the community level. We're not talking about, what's going to happen with Dina Boluarte in the upcoming elections in Peru. I don't know if she's going to win. Do you?
So why is that? Is it the NGOs coming in, influencing the locals? Is it the cocaine trade that they don't want disrupted from the mining companies?
Exactly right. Those points take the lead. And Bill, the problem is, in Peru, some of the areas that you're dealing with, sadly, are still led by people that are not at the same level of education as us. There's still a significant level of people that need to be educated. We call them in Spanish analfabetos, right? But it's sad to say that, significant portion of the population remains uneducated. And then all of a sudden you get people coming and trying to confuse them and trying to tell them, we're going to build a mine, but you're going to be okay. We're not going to touch your mangoes or your lemons, and we're not going to affect your waters. But you know what? In today's world, you can't get away with saying stuff like that. Their kids are probably very well educated. They probably understand what's going on. They have access to the internet, I'm sure. And they can all of a sudden research everything to the nth degree and tell their parents who may not be able to read or write properly and warn them. And they do that. And then the promises that always fall by the wayside. And that to me is one of the things that hurts me the most, is when I hear all these promises made by, different industries and coming into a country like Peru that really needs the help. And they have the resources. They're blessed with those resources. But yet those companies that come don't deliver like they're supposed to.
How can retail investors be confident in their speculations in the junior resource sector? I know that's an open-ended question, but maybe share some of your thoughts.
Again, know where you're going. Know where you're going. Know where you're comfortable. Don't take it for granted that because Ed Baer tells you he's found, El Dorado or the biggest mine you can ever see, but that's enough. It never is. And because I may have a great board of directors, a great management team, and I've been very lucky to work among those people, that's enough for you, Bill Powers, to say, yeah, I'm going to put my $1,000 into Ed's story. Because at the end of the day, to you, it really is a story. You're not getting on a plane, more than likely. You're not going to go visit the site. You're going to rely on analysts, maybe third parties. You're going to rely on interviews like the one you and I are conducting right now. You may rely on the media, but you're not going to go down there and assess it for yourself. So you owe it to yourself, to your hard-earned money. And that's why the phrase exists, hard-earned, because you really work for your money. If you want to protect it, if you want to be smart about it, please do your due diligence. Do yourself a favor. Take the time. In today's world with the internet, you can see anything and everything you want to see. Go look for it. Find it.
So, Ed, I've lost money, and even in speculative companies to where I talked directly with the directors. And when things fell apart, I realized that the directors fully didn't realize what was going on, which begs the question, are directors really the stewards for shareholders of the entity they're under? And how many directors, in your experience, actually take their role seriously?
I did my master's in law and securities law, but I did focus on corporate governance. That was really my area that really appealed to me the most. And I can tell you, if you combine corporate governance with securities law, and you see kind of the line, there's a gray line between the two. And a lot of companies sadly fall in that gray side, where exactly as you just said, a lot of the directors are not well educated about what exactly they're representing. And when you get to that position, you're not going to win. You're going to fail. And shareholders are going to be in a situation where they're going to be wondering, well, what happened? Where were the directors? And I don't blame them. And having been there and having been in a situation where we've been challenged, again, TVX would be a perfect example. We spent $300 million in Greece over 6 years. Nobody stopped it. Nobody pulled the reins. Nobody stopped the process knowing that we weren't getting any farther ahead. And again, it's been over 30 years and you're still not producing anything from the main asset. So you kind of go back and, I was a director of TVX, so I'll take some of the blame myself. We should have stood up and addressed it a lot better. We put the company in a state of bankruptcy, very close to just going under and turning off the lights. So at the end of the day, we have to take more responsibility of directors. Directors need to be, I hate to say tested, but at the very least, certainly visit the sites, certainly understand who the government players are. They're representing shareholders' money. Wouldn't you, as an investor, Bill, want to know that Ed Baer went down to Peru, spoke to the community, like members of the community, maybe went to a town hall, attended the town hall, listened to questions, responded to questions, and then go one step above to the provincial level and then to the federal level? I know I would, because that's what I do nowadays. And that's what I mean about my intensive due diligence. I take the time to ask questions. And I don't rely on other people's words wholly. I want to know. I want people to answer my own questions in the same way that you're asking me questions. And is it going to guarantee that my investment's going to be safe? No. But it's going to guarantee that at least I'm educated and I know what it is that I'm putting my money into. And that gives you a sense of comfort. It does. And understanding and patience. That's, by the way, that's the last thing that people have is patience when it comes to junior miners.
I've seen signing bonuses for board chairs. Okay. What's reasonable compensation for a board of director in junior mining?
Depends on the market cap, and depends on the jurisdiction, depends on the work that they're truly doing. I don't care that the name is listed on a committee. What is it that they have done? And their understanding of what they're involved in. I'll answer it this way. If I would be a CEO of a current company today, running a junior mining asset, and I believe in that asset wholly, and I would believe that my directors are in there because they believe in what we're trying to do, we're trying to build an asset, create jobs, etc., then I would say that the directors solely should get options at such time as we reach the final milestone of production or take over, but not get any compensation prior to that stage. No.
Now, arguing on behalf of the directors, could you say, well, they're taking on a personal liability by being a director, so they should get more than just options as a result of that to compensate for their personal risk? Is there any legitimacy to that argument?
There may be, but that's their way of justifying the fact that they chose to be there. Nobody's forcing you to join the board. If you want the prestige of joining a board and being part of a great story, then prove it. Stay till the end. Stay till the end, cash out at the right time, not earlier. Don't take money that's coming in for a junior company, especially when that money should be geared for the ground, or for the corporate development that you're planning, but not for your pocket. That just doesn't make sense. Take shares, take options, take whatever it is, but don't take cash.
What do you think about the role of managed money in the junior mining sector? Like, is there a place for a portfolio manager or someone with specialized due diligence that can take investors' money and make money? And what are some of your overall thoughts here?
I think being on the buy side is a very tricky situation because people try to kind of tell you that they're great. They show you numbers, they show you charts. Oh, where performance is 10% over last quarter, now it's 30% and whatever. You know what? If you can roll dice and somebody's bankrolling you in Vegas and you're at Bellagio every day for a week, and the same people are bankrolling, you're going to hit some numbers. I don't know what the percentage is going to be, but you're going to hit some numbers. So if you're a portfolio manager, you have, a universe of maybe 20 companies, chances are 3, 4, or 5 are going to do well if you know what you're doing. Maybe the other 10, 5 or 8 are going to do okay, but maybe not as great. But they're getting paid extremely well. You got to remember that. You're paying for their services, and their services are costly. Are they adding significant value to you? If you're not willing to do the work, yes. If you're not willing to take on the responsibility of managing your money, then maybe yes. Would I subscribe to a fund like like investment funds? Would I try and do that job? No, I don't. No, it's not for me. I mean, I could have gone the CFA route at one point. I chose not to, just because I didn't want to end up as a portfolio manager. But at the end of the day, no, I don't think. I think you can do a lot of this work properly if you do the right things yourself. At the end of the day, it's your money. Do you like? I don't even like going to the bank and having the bank charging me monthly fees. And here with a portfolio manager, look at the fees that you're actually paying for the service. So it really depends on you.
I agree with you. I have a family member who's in the medical profession that makes good money, and this person finally said, "What am I doing?" and took the money back and just did an index fund. He said, "Well, I don't need to give my money to somebody else so he can buy an index. I'll just do it myself on my own."
I agree with you. I agree with you. Yeah, 100%.
If you could change some things in the Canadian junior mining sector, what would be like your 2 or 3 top things that you would change if it was within your power?
So when we're talking about the Canadian junior mining sector, and there's, varying numbers, but let's say that the numbers range between 1,000 to 1,400 companies listed on the exchanges in Canada. Number one, there's got to be different thresholds to protect the investor that the market, the OSC needs to look at, the Ontario Securities Commission and other commissions around the country. They're going to unite as a whole and call it the Canadian Securities Commission. But whoever's going to be taking on that responsibility needs to look at this closer. My problem with it is a lot of people are selling moose pasture with a story in Canada. And I really take offense to that. Telling me that you may have 10,000 hectares of promising land in Thunder Bay, Ontario, where other mines used to reside, and you're raising money against that. On what basis? On what? But because an old mine was there in the late 1800s, that's a significant reason to get Bill Powers to give me $30,000? I don't see it. I'm sorry, I don't see it. The creation of the CSE, is a good thing because it does incubate companies, but then live by the term incubate and, set up the proper precepts for what incubation really means and give people an incentive. So if you subscribe to a financing when a company gets listed for the first time, then you should get a kickback if the company succeeds at a later date. You should get maybe a 10% warrant or something like that down the line that you can make yourself feel good, or an option down the line that you have the right to participate again on your initial support of this company. Those kinds of things would incentivize people to create a better feel. Because remember one thing, Bill, prior to this 4 or 5 year run of gold, a lot of people got burned really, really badly. And if you're in the junior market over the last 18 to 24 months, you haven't been enjoying yourself. How many companies have really gone down versus how many companies have really gone up? It's significant. Very, very significant.
Do you value gold right now, or where do you like to be in terms of commodities?
So again, I don't follow the price of the commodity. I follow the inherent understanding that I have on what the commodity does. My favorite commodity remains copper. It has been for many, many years. And my second one is gold, because I see a lot of turbulence to come still economically and politically around the world. And that is a better safe haven to me than the US dollar or the euro or whatever currency that you have to be mindful of, because it's important to know what currency you're backing and what currency you can continue to depend on. But I like copper the most. And a lot of the projects that I look at right now are copper. You and I previously discussed a company called Pan Global Resources. I love that company. It's got all the elements of something that, to an earlier point that you raised with me, what do I look for in a company? If you let me, I'll break it down for you with Pan Global as an example. So Pan Global Resources is based in Spain. They have 2 significant assets. The Carmenes deposit in northern Spain, outside of León, Spain, and the other one's in the south, outside of Sevilla. It's about a 30-minute drive from Sevilla. But what's really interesting about the one in the south in Sevilla is that management of Pan Global Resources was able to acquire 5,600 hectares to create the Escacena project in the middle of the foremost belt that you want to be in, which is, the Iberian Pyrite Belt. That's where Rio Tinto got its start and still continues to mine today. First Quantum is there. Grupo Mexico is there. You got some significant deposits in and around. And for whatever reason, you have this pocket of land that none of these neighbors were ever able to acquire. But in comes this junior company able to acquire this, and now they're working on it. They already have one discovery. I'm telling you, this thing could be in production before the end of the decade, number one. Number two, I think there's a lot more good news to come. Stocks trading, I don't know, roughly 13 cents Canadian, market cap of around 30 odd million. If you want to speculate, and I'm looking at it as an investment, but if the average person wants to speculate on something, it has some of the elements that or criteria that I would look for. But of greater importance, the one in the north ticks off all my boxes as DNA Gold Corp and the things that we do. It's an area that was previously mined until the 1930s. So call it roughly 100 years that it hasn't been touched. Imagine today's technology on a mine that previously produced significant quantities of metal, copper, cobalt. But now we find that there's also gold there that they were never able to look for, maybe because of technology, maybe because it wasn't economically viable. Whatever the reasons, their focus was to produce copper and cobalt concentrate. And you can still produce that concentrate today, probably at better level, maybe even at lower grades of ore, but it was a mine. And typically, you can find a new mine where an old mine used to be. I'm sure you've heard that. So if you follow that and you follow the history of what this mine was about, and you read some of the articles that are available online, and if you do your research properly, you may see things as the way that I see it. Here's a great opportunity for an asset that the market doesn't seem to understand properly, in my opinion. It's run by a gentleman by the name of Tim Moody, who's got over 40 years of experience in the industry, foremost geologist, worked all around the world, and comes from Rio Tinto. So he knows the asset is a few kilometers from his current asset that he's developing. And that's how he came about, gathering these assets in Spain, the one in the south and the one in the north, because he kept his mind on the job, if you will, right? On knowing what assets would be available in an area and a jurisdiction that he feels very comfortable working in. So you gotta praise him for that. And I can tell you, if I would look at that asset today, I would have, if Bill would kindly write me a check for $30 million, we'll go buy that asset. You and I could own it ourselves privately. Can you write me a check for $30 million?
No, I can't.
But if we could, those are the kind of things. I hope I'm getting my message across to you. But those are the kind of things that I look for. History is significant. Don't ignore it.
Ed, thank you for that. Now, with that question you asked me about if you and I could put together $30 million and go buy it. Sure. So when should a project go public and when should it stay private? Because I've invested in both private and public companies, and I could tell you stories from both sides.
Well, look, going public and the timing thereon depends on your ability to access capital. I mean, if you're going to be in the junior mining game, you got to know that well is going to run dry at some point. Or if you look at it a different way, you got to know you have to have a faucet that you can always turn on every 6 months, every whatever number of months. It's costly to work. And as commodity prices rise and the need to explore, exploration companies are having the time of their lives. They can charge whatever they want, right? People in the mining industry are making a killing right now, the services side of things. And question is, how much money are you willing to deposit? The deposit can go on for a while, and building the deposit and finding the numbers. If you're a junior mining company, I believe you need to put out a resource as soon as you have at least the basis for a solid, sound resource. A lot of companies don't do that. To be fair, Pan Global has not done that. A lot of the market is punishing it, in my view, because today they haven't published a number from Escasena. They've been working on it for now a number of years. They have over 180 holes drilled into this thing without a resource. So to the average investor, it means they don't have anything. Where the reality is that Tim is working according to where he comes from, the mentality that he comes from Rio Tinto, in my opinion, where they drill until their comfort level is such that they can make a serious decision that can lead them to a PFS, a pre-feasibility study, or maybe a bankable feasibility study. But that's the mentality that comes from working for a senior company. And he's maybe not treating it as a junior company. But if you're an investor of something like Pan Global, you've been holding this thing for about 2-3 years. You've seen the stock go from as high as 80 odd cents, now trading at 13 cents. You get press releases that look really good. The numbers look interesting. You're growing this deposit, yet the share price does nothing, and there's more sellers than buyers. There's a concern. So that's a problem. Should they be going private? To reverse your question, should they privatize it and come back at a later date? Look, I've been part and parcel of privatizing companies in the past. It works really well. If you really think, but you need to have a backer. You need to have a significant backer, whether it's a senior miner or, a friendly family office, whatever it may be. But if you can privatize it, maybe this would be a perfect situation for them to do things quietly, build it out, and get to the level that management intends to get it to, and then roll it back out when you really, really know what exactly you have. And it's not a costly proposition of $30 million Canadian or 35 million, whatever the number may be. But to go public, don't go public unless you're really sure of what you want to do. You know, the reason to go public is to raise capital, first and foremost, in my opinion. If you want to grow the company and you need to raise capital, you better be sure of what you have, and make sure you have an anchor tenant. You need at least one or two anchor tenants to succeed. You can't just depend on the retail market. I hate to say it that way, but it's true. You can't.
And going public also gives your investors some liquidity to get a return on their investment, because I've been a part of private companies to where you feel handcuffed. You ask for an update, and Ed, every time I get an update, okay, we have this challenge. Hey, Bill, you got any more money? And it was like, okay, this is really annoying. You're not performing, and then every time we have an update call, it's like, what's in your wallet?
But what exactly are they doing with the money that they get? Is it going to pay their salaries? Because that's one thing. I take that. See, I take offense to companies paying $200,000 for an IR person, or like, that's insulting for a junior mining company. To me, a junior mining company CEO shouldn't be making more than 150 Canadian. I understand people have to pay their expenses, but if your expenses are greater than $10,000 a month, maybe you're in the wrong game. Seriously. And the same thing with like IR. Look, I started as IR when IR wasn't even IR. I'm 63 now. I go back to my middle to late 20s when I started this. And my first job was IR. That's how I built myself out and got into corporate development and CEO and rang the bell and all that stuff. But, IR people, I don't agree with the salaries. I don't agree with hiring, company XYZ to represent you out there. If and also a lot of them go back to the same turnstile, the same group of people, the 70 portfolio managers that invest in mining every time, all of them. It's like lemmings, they all walk together. They all go to the same conference, back to the other conference, back to the other conference. That's not new blood. That's not what's going to increase. My success was going outside of that fold. I raised $69 million in London, not one mining person, not what you would call a mining investor.
Was that a roadshow set up for you, or did you create your own roadshow?
I did it myself. I went
the old-fashioned way, picking up the phone?
I'll be candid with you. I used my cultural background to get me to a couple of doors. I used some relationships based on my religion, if you will. So being in the Jewish community, there's a different niche that you can actually access if you know how to access it. And I was able to knock on a couple of friendly doors. They liked me. They liked, I don't know, my cologne that night. I don't know. But whatever the story was, they were happy to hear my story. And then one guy came in. Then a couple of days later, a couple of other people called me. And before you know it, it's $69 million.
What motivates
life? Pardon me?
Yeah, it changes your life. And like with big exits, okay, you don't have to work. So what motivates you to work? Is it just to stay fresh? My wife, her grandmother's 100 years old. She plays Scrabble every day, reads books every day, because she says, I don't want to deteriorate. If I'm going to be around, I want to make the most of it.
I don't want to fade away. Exactly right. To that point, I continue to read books like crazy. I'm not a big TV fan other than sports. But I not only specific sports, but I like reading. I like keeping abreast. And you know what? The one thing that always grabs me is the opportunity to create jobs. I really, really feel that that's contributing back and giving back for my own well-being. And why not share that? And if I can help out, I do. If I can touch on one thing that maybe is quasi-mining, I never thought I was going to go away from mining itself, but I did one thing a couple of years ago in 2022. I met an engineer that is building a haulage system for the mining industry, because he was actually a contractor to the mining industry for the haulage services side of the industry. So now we're building a zero-emission electric monorail. And you know what? We're backed by Agnico Eagle, Capstone Copper, Vale, Rio Tinto. If you go to their website, take a look to see what our consortium is based on. And by consortium, I mean people that are writing checks for us to continue to develop this this particular company. And we're going to be on the forefront of installing full systems at mines to actually increase the haulage rate, material handling as a whole, lower OPEX and CAPEX, and minimize electricity usage at a site. I mean, how is that not a good service to be kind of mindful of, right? So, and I fell into it by luck. And now I'm very much involved in it, and I think we're going to be developing this right now. And there is obviously interest from, the Bay Streets of the world and the Wall Streets of the world to see exactly how we're doing it. But to your earlier point, we're private right now. We have no desire to go public just yet. We are backed by the people we need to be backed by, and people are aware of it. But we'll go public if and when we need to, or maybe we won't. No rush.
Ed, you're not on the interview circuit, the YouTube interview circuit. I don't know if this is your first interview you've done. Okay, for a podcast, and you're not selling a product per se, so you didn't need to come on the show. But do you want to be reached if listeners want to reach out to you? If so, how would they reach you?
I love this stuff, so I'm happy to talk and discuss it with people. But again, just know that if you reach out to me, you're only going to hear Ed Baer's opinion. I don't speak for the industry. I don't speak for anybody else's experiences. I can only tell you what Ed Baer has done. And I'm happy to share my ideas, happy to take on your questions, happy to be challenged on the things that I may be, caught up on that maybe you think I'm, completely out of whack on. So feel free. If people want to talk to me, happy to talk to them. And again, I thank you very much for what you do. I think it's awesome. And I've been an avid fan of yours. I've watched I don't know how many of your videos, and I like a lot of the people that you've had on. Kevin McLean, I've known for many, many years. Catherine McLeod-Seltzer, a lot of respect for her, known her for a lot of years. Plus, she's chair of Kinross, where TVX Gold assets reside. So, as we're talking, if you notice, everything always turns around in the industry. We all know each other some way, somehow. So it works out really well. And by the way, to the Kinross TVX assets, I mentioned to you, I worked for Ike Batista, who was the 7th wealthiest man in the world. And if you want to learn about the challenges of building, multi-billion-dollar assets, billion-dollar assets, take the time and look at what Ike's life has been about to this day. And still a friend of mine, and a very good friend of mine for over 30 years, and hold him in highest regard. Yeah.
And so they should reach you on LinkedIn or email? What's the best method?
The best way, LinkedIn's always easy for people, so feel free. Or if you want to reach me, go to my website, DNAGoldCorp.com, and my email is e.baer, B-A-E-R, at DNAGoldCorp.com. So feel free. Happy to chat with people. Happy to be back again if I can ever help you out or talk about a particular topic. Yes. Happy to give you my thoughts.
Let's have a follow-up interview, and in the meantime, shalom.
Shalom. Thank you so much.